Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, we'll start the day out today with the German DAX. As you can see, it basically shook off the bombing that they had in the tube over there. If we take a look at the daily chart, you'll see, hold on one second, I'll get that one up. You'll see that it's just hugging this long-term downtrend line. I mean, someone asked a question by email this morning, why don't these markets break with missiles in Korea and bombing in London? Folks, they've been doing that for a long time. It's not over till it's over, as Yogi Berra said, and evidently it is not over. Well, one day it will be, but maybe not in our lifetime, certainly not in mine. Hold on one second, please. We'll put up the DAX daily, and you can see it's right at that 61% retracement at 12,543. The question also asked, have I ever seen this before? Oh, yes, we've seen this many times in the commodity markets where bearish news would come out and the market would continue to go higher and higher, and then finally it would go over. One of the most prevalent of those was the Treasury bond market a few years ago. Crude oil back when it was trading at around 120, 130. Now, a few of those, and of course gold. You know, gold did this several times back in April of 2011 and also did in January of 1980. But this is a major topic. The question is when and how it's going to unfold. Well, it'll tell you when it's ready. When you first see the big down day, and the big down day in the Dow, folks, has to be about 500 points. The biggest day we've had so far was a couple weeks ago when we were down 300. So 1.618 times 300 will take us to the level that I would think would be the first big down move, and it'll probably be based on, maybe a rocket, going a little too close to Guam or Japan or something like that. It's going to be something probably totally out of the blue. Okay, our first questions today comes from our good friend, Mr. Z in the den. He wanted to ask about soybeans, and all I wanted to do now is I'll bring up the whole complex during this first part of the show because it is something that we all use. Whether you use paint or margarine or, oh my gosh, tofu. I mean, it's just in so much stuff you can't believe. You notice here the November bean chart. The report was here, back on the 12th. You notice we backed off just a little bit below the 61% retracement. And then we had this huge, 40-cent rally that took us up here. We're almost at an equal rally to this last one that started back on August the 28th. That's also a 50% retracement of the high from back in July. So it's going to have a little bit of problems around this 980 level, it looks like, from a technical basis. But again, that could be just short term. We don't really actually know that. Of course, we never know, but we have to assume on certain things. Now, of the soybean complex, by far, the strongest of the soybean complex is the soybean oil. This is December oil, Christmas oil. This was the contract that got me back in business back in 1976 after I had made a big foo-ha-ha back in 1974. Anyway, you'll notice that you have several ABCD patterns stretching up to the $37 per pound. Oil is in pounds, $37 per pound. That's about £1.75 from where it is. That's about $1,000 away to where it's looking at. What's interesting is that we've hit this 61% retracement in soybean oil since July 31st. We've hit it about three or four times, and it hasn't been able to, close above there only one time. So this could be major resistance in the soybean oil. The only way we would know that is if we drop about a penny a pound from this level down to about 34.24, then I would assume that this 61% retracement is pretty much the major resistance of what we're looking at. If you believe that it's going down, you've got a great place to short it here because you're just sitting right at the 61% retracement level, and the difference is only about 3/4 of a penny to see if you're wrong or not. So that's an interesting one to take a look at. However, let's take a look at the biggest part of the soybean complex, which is the hold on one second. We'll cover Bitcoin here in just a little bit, folks. Put your little hands under your little bottom and wait just a second, and we'll cover Bitcoin. We want to cover the major markets first because Bitcoin not going to be around very long, in my opinion. But again, I was wrong about color TVs and also microwave ovens. All righty, now as we look here at the soybean oil, this is really interesting one, folks, because we've made a triple bottom here from September of last year. We touched it again in June, and we touched it recently here on August the 28th. We retested it here with the report on Friday, the bearish report, and you saw what the market did to the bearish report. So that's really a strong test of the triple bottom. So I would assume that the soybean oil has made some type of seasonal bottom in here because for it to rally $10 a ton is not an easy task, and it certainly made it spot on. So that's what we're watching here in the excuse me one second, in the soybean complex. So that's what it looks like, that this looks like it's holding. Now I wanted to cover the corn also, because corn has done this 1.618 expansion and has held it several times now. So you can see that big 1.618 expansion down there at the 347. We're trading about 10 cents higher than that. But folks, the key things is it couldn't get below it and stay there. That's the thing that I'm watching. And remember, we're starting harvest here pretty soon here in another couple weeks. And if harvest pressure doesn't come in, that means demand is most probably getting ready to make a move of some kind. So let's not lose track of these grains. And sometimes they can bottom right during the crop season, and that is usually based on a strong demand. And we have had the weakness in the dollar that has dissipated a great deal, but it's still relatively weak to where it was 3 or 4 weeks ago. So that makes our products even a lot cheaper than what we would look at ordinarily. So I think that's something to really factor in. When we come back from the break, I'm going to cover something very esoteric. I think you're going to like it. It comes from my good friend over in the UK who does all the things on sacred geometry and things in the market. He's the best I know, folks. I've never seen anybody do anything better than him, and I will share with you, with his approval, what he's looking at in the market. And he sent this to me a long time ago, and I think you'll enjoy it because it's based on sacred geometry, of which Fibonacci summation sequence is part of that. So we will cover this. I'll post a chart, and then when we come back from the break, we're going to discuss this. I think you'll enjoy it, and you'll get a better idea of what we're looking at here.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And here comes from my good friend over in the UK that I met about 12 years ago. How I met him was very interesting. I was giving a speech over in London, and it was a one-day seminar, and we did a little bit of live trading, and there were about 50 people in the room. I was doing it with Tom Hugard, and it was really fun. And after it was over, you know, he wanted to go to dinner. Unfortunately, I'd already made arrangements. I couldn't go, but when I got back to Tucson, he called me a few times and we chatted back and forth, and he told me how he had studied a lot of different things. Most of it was not very helpful, and he was reluctant to work with me, and was wondering if I would work under the premise that he would pay me 3 times my normal fee if he thought it was worth it. And if he didn't have to pay anything. And he was very friendly, and so I said, sure. I said, let's do that. And so he came over, and he spent a week with me over in Tucson, Arizona. And when he left me the fee plus a very large tip. And we were friends before that, but since that time we became even better friends. And every year he sends Sarah and I go back to visit him and spend at least a week with him. But he does all kinds of things with sacred geometry, folks. Not too much astrology, but definitely sacred geometry, going back into ancient Sumeria, Pythagoras, all that kind of stuff. But he uses these Fibonacci spirals to determine what the market's doing. And the key is you have to find the spiral and make sure that the ratio exactly 1.618. On this particular graph that he sent me, this is the one he sent me. It was about, I think it was about, before. It was right after the solar eclipse, I believe, back on the 21st of August is when he sent this to me, and he noticed he had September 11th there and his price of $14.97. Well, as you noticed, that we only hit $14.96.5. So I guess this one isn't working, but let's keep it in mind just to see what happens with it, because it's very interesting. He was also able to pinpoint the bottom in 2009 using this type of strategy, but the bottom was a lot easier to find than a top. And I believe the reason for that is fear is an easier emotion to gauge than is greed, because fear, you have physical symptoms of, sweating, chalk white around your mouth, and also your knuckles become white, and your talk becomes erratic, much like I am here each day. But anyway, that's neither here nor there. So we'll keep a close eye on that. So I know that the big interest in the room today happens to be the Bitcoin. So let's get it up here and take a look at it. This is what it's done here recently, and believe me, it has had one heck of a run. And if you ever want to see a tulip bulb chart, folks, it looks just like this. And believe me, when Jamie Dimon comes on and says something like that, I mean, he's in a competitive business with Bitcoin. They want to put him out of business. So what do you expect him to say? Yeah, this is a great investment, but we're down 55%, folks, in 2 weeks. That's how quickly it dropped. Look at the other 55% correction that we had, back a year ago. That took well over a month and a half to complete, and that was a 61% retracement off the previous low. So what it looks like right now is that Bitcoin is, going to be heading down to about the 61% retracement comes in just a little bit lower than where we are right now, but there's also a possibility that this could be it. And you'll know that is if it gives it all back. In other words, if it takes out the highs that we made, way back around 1,000, then that will tell you that the Bitcoin phenomenon has hit the skids, and we'll see what's down. You're right. This is a very good point. Mr. P in the room says that Bitcoin has moved down 80% before, from 1,200 to 200, and then turned around and gone. So we'll see. It's still got a good chance here, and we'll be looking at that. This is a question about my friend in London. Yes, this is no, this isn't the gentleman from the Isle of Man. That's John Jameson. John doesn't do that type of work, but no, this is my friend in the UK. He's not in the public eye at all. He's the one that does all the things on the political fronts, as far as where all this stuff comes from, and secret societies. And he's got, I wish you would be able to see his PowerPoint presentation that he showed me, but he does not allow the public to do that. But it would really be amazing for everybody to see. I've asked him, but no, that's a no-go. And so, but he did allow me to show this chart because I've seen other charts from him that are amazing, but this is interesting because we're sitting right at that price that he gave me 3 weeks ago. So that's the only reason I'm bringing this up, and hopefully it's bring a bit of human interest into it, because it does have the Fibonacci relationship there with it. So that's primarily why I'm watching. Let's get back to the real world here, folks. I want to bring up a chart here that looks real interesting here from a very, very long standpoint. This goes back to the opening of Microsoft, way back in the around, I think it was around 1982 or 1986 is when it first came out. You'll notice the big ABCD that's there. It's also a smaller ABCD in between there, which is very, very interesting. So that's a big pattern in Microsoft on the long-term chart. So that means a great deal, I believe. And if we take a look at it here, on the daily chart, you'll notice that we have some very interesting patterns here forming in Microsoft. Take a look at this quickly, folks. You'll notice that we had that 3 drive to a top pattern back in July. We had about a 50% retracement. Market went from 74 down to 71, basically nothing. And then we went from 71 to 75.5. At 75.5, folks, we were trading at a 1.27 of the July high and a 1.618 expansion of the lunar eclipse in August. So, and we haven't gone above it, and this is up to date. We had a higher market yesterday, and then it immediately reversed. So I'm not sure whether this is going to be it. We'll see if that's going to be the same. So that's some very interesting numbers, Mr. P, on that, and I'm sure that has some bearing on the market. Gann was a real brilliant fellow. There's no question about that. And of course, he died with a lot of things in secret. But we'll see. Remember, folks, this stock market is basically, you're looking at probably 100 stocks on the whole thing. You know what I mean? That's the That's the main thing that you want to keep in mind. You've got about the 20 of the NASDAQ stocks 100. You got 15 of the Dow stocks that are, really high priced. And then you've got about 40 or 50 stocks in the S&P 500 that are weighted that, can keep this stock market up. That's only 100 stocks out of the thousands that are there. And, that's my opinion. And you'll see that's why I like foreign exchange, is because it gives you a little bit better feeling of what's happening in the real world. That's the way it looks the way it looks to me. So I hope that helps you. We'll come back 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
If you're looking to open your portfolio to a world of opportunity, consider the new market-safe emerging currency CD from Everbank. This 3-year U.S. dollar-denominated CD gives you exposure to 5 equally weighted currencies from Brazil, China, India, Indonesia, and Turkey at a time when experts see great potential for global growth. Even better, it features a 7.0 leverage factor, which means you could earn a potential market upside payment of 7 times the CD's performance at maturity with no cap if the currencies increase in value over the CD's term. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. The September 28th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA, FSB, member FDIC.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I posted the chart of the Japanese yen showing you the fact that last week on Friday we made a perfect 61% retracement, and that was indicative possibly of a good bottom coming in here in the yen. And if we've rallied 400 pips, folks, in 5 days, we're not finished. And this is still early Friday, so it's had one heck of a move coming off of that level. That is very indicative of a major turn in the Japanese yen. So that's something to, pay very close attention to. Also, what I'd like to do is I would like to focus on the let me get this ready here, and we'll bring up the chart of the British pound on a weekly basis that I was talking about in the newsletter this week. That you'll notice here that we were completing this ABCD structure up near the 135 level, which was the 50% level on the British pound. And if we look at the British pound on a little bit closer time frame, you're going to see a very, very interesting pattern complete here, if I can find it, and I believe I can. Well, shucks, Larry, just give me a second here. What did I do with it? I know I have it here. Oh, I'll have to bring it up at the I found it. There you go. See the old gray matter. Here's what it's been doing. This is a daily chart, and you'll be able to see these expansions as they're occurring right now. And all I did here, folks, just get this. Uh-oh, we got a problem in River City. There we go. This is the British pound since the beginning of the year. You'll notice that we bottomed in January. We rallied, came down to a 7-8% retracement, and then we've been making these series of ABCD patterns that are completing up here at the 1.618 level of 135.84. It's trading about that level right now, but the problem is, folks, if you'll look at this closely, you'll notice that this last ABCD line has extended very, very quickly. In other words, the rate of change from the C point is stronger than any other move that we've had on the upside since January. That means it's most probably going to extend. You know, you just can't sell it there. Well, you could and then put a stop in if you like, but it's easier to wait for a some type of a bar like a doji or a shooting star to give an idea that, yes, there has been some people either ready to take profits or at least stand aside from the long side. But that's the main thing that we're looking at as we watch this British pound, because it's pretty much spot on, done what it's supposed to do, and we're trading right at that same level right now, 135.84. So it's pretty much spot on to what we're watching. So let's keep a close eye on that one, because it's got some very interesting possibilities here. Because on the long-term basis, the British pound has been in a downtrend for a long time, but now as they're coming into Brexit, it looks like they have more power than they originally anticipated, and that makes it extremely interesting, from a possibility of a major turn that occurred down there at that 119 level. Remember, the low in the pound going back to 1985 was 105, I believe, and we got down to 119 when we hit that level here just recently. We'll have to wait, and just to review that, we'll have to wait and see. Someone's asked a question about the Microsoft chart. The good thing about the Microsoft chart, folks, this is a huge chart, huge stock, of course, and millions and millions of shares outstanding, of which Steve Ballmer is the longest. He's the largest stockholder in Microsoft, even more than Mr. Gates. But it trades extremely well. It's like trading butter. You don't have these wild gaps very often. You do occasionally, but it does trade very well technically, and it makes it look real interesting, from a technical perspective of where we are right now. But as we're talking about the currencies, let's just review here the euro, because as coming into this week right here, you'll notice that hold on here just one second. You'll notice that the euro did get up to that 120.97 level. We backed off 200 pips. We've now rallied back almost 100 pips from that bottom, so we're at a real interesting spot here on a Fibonacci relationship based on the euro. So that's another one that just a lot of things happening, folks. This is a week of what we call a lot of things happening. So, and nothing happening in the stock market, but the other stuff is moving. It will. We're going to start to see big volatility in the stock market. Markets don't, when markets are doing this, they're just getting set up to do something a whole lot different, whether it's making a bottom or a top. Tops are more difficult than bottoms because fears and emotional is an emotion that you can actually measure, whereas greed, you really can't measure that very well. So let's watch that. Now, I wanted to bring to your attention also the IWM, because it's been lagging the market for quite some time. And wait, winter's coming, but you got to go through fall first, folks. That's, I mean, oh, I want to talk about something really important here in a second, but you'll notice here the Russell went up exactly to the 78% level, hit it twice, 2 days in a row, closed below it, so we'll see. Regarding, I had an email about this. I really didn't want to talk about it too much because it's something that's way out there in left field, but a lot of things on the internet are saying that the end of the world is coming on September the 23rd, I believe, or the 24th, when there's supposed to be darkness over Israel in the middle of the day. If that happens, maybe the end of the world is coming, but I've seen so many of these over the years that I really don't. It's more than 25 times, Jay. I think it's 250 times. Every time they used to have a solar eclipse back in those old days, it was doing the same thing. So it might be a good sell-off into the 22nd. Who knows? Hey, the end of the world might not even stop this market. If nuclear war doesn't stop it and terrorist activity don't stop it, nothing can stop it. But anyway, when you read those things, folks, that's someone's opinion. And believe me, it's heavily related into ancient texts and stuff, and the way they interpreted those things is who knows. Yes, I was around when the Earth was flat. In fact, I was on Columbus's second ship. I was on the Pinta. I wasn't on the Santa Maria, but I was a first mate. That's why I don't get on boats anymore, because I got so sick. And then when we got to the free world, they burned the boat, and I had to swim ashore. So I still remember that from one of my past lives. And you guys are giving me no, I didn't trade with Moses. He was before my time, but I knew his second cousin. Folks, I'm not that old. I've just been trading a long time. What are you going to do? Well, I'd like to have known Pythagoras, but who knows? Yeah, this trading thing has been so good to me over the years. I mean, gosh, I'm just really blessed. The people that I've met is what is the folks that I've met. And in fact, my 10 years here at TFNN have been absolutely terrific. The people that I've met, I've just been lucky. I was at Drexel for 6 years. I traded on the floor for 3 years, worked at Commodity Corporation. I've done and traveled all over the world many times. I mean, this has been a great deal for me. And there's no schools to go to learn this. I have a master's degree in business and a RX degree, but that don't mean anything, folks. You have to go to the School of Hard Knocks, brother. Keep the faith, shut the front door, raise the rent. We'll be right back after paying a few bills. 877-927-6648.
If you're looking to open your portfolio to a world of opportunity, consider the new market-safe emerging currency CD from Everbank. This 3-year U.S. dollar-denominated CD gives you exposure to 5 equally weighted currencies from Brazil, China, India, Indonesia, and Turkey at a time when experts see great potential for global growth. Even better, it features a 7.0 leverage factor, which means you could earn a potential market upside payment of 7 times the CD's performance at maturity with no cap if the currencies increase in value over the CD's term. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. The September 28th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA, FSB, member FDIC.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, folks, we're back, and I'm going to go through the metals here just a little bit to see where we are. You'll notice that we topped here last Friday in the gold up at the 1362 level. We backed off just a tad more than $34 an ounce, which is really what's a very important spot, because that's the harmonic number in gold. From that level, we rallied up to almost a 50% retracement up at the level of yesterday at 1338. We need to get above 1338 for it in order to really be something of great significance, I would think. So hold on one second here. Evidently the charts didn't post. If you'll, oh dear, just a second. I've got a slight problem here with the, oh, I know what the problem is. Here we go. Let's get this. I had the TFNN thing in there. There we go. Okay, here's the gold chart we're talking about. We just made a 61% retracement just a little while ago. If that doesn't hold, you're looking at another few dollars lower to the 78.6, but it still has a bearish bias, in my opinion, looking at it. And there are two reasons for it. The first reason, of course, is if we look at the silver market, what it's done, even though silver was able to pop above the 78% level and stay there for a couple of days, it immediately gave it back last week and again this week. So that's not a very, very positive sign from the metals market. And if we take a look at the XAU, the gold-silver index, we'll bring this up and take a look at it. You'll see that we hit a 78% retracement here just about 2 weeks ago there at that 93 level. We're now trading about 88 and change. You'll see that it's been lagging the gold market quite a bit. And that's the key to this, is the fact that this usually is a good indicator of what to expect in gold. And since it hasn't been stronger than gold, you'd assume that it's getting ready to go to the downside. So that's the main thing. Folks, we've had something very exciting happen here in Tucson yesterday. We spied, they found a white jaguar in the mountains about 2 miles from where we live. They had him on tape. It's really spectacular to see him. Evidently, he's migrated up from the middle to northern part of Mexico to make his home in Sabino Canyon. So the whole world's out there with their cameras trying to take pictures of this incredible animal. It's very, very rare. But if you get on the news and take a look at it, you might want to see that what's going on at that time. So we'll see how that works out. Okay, well, that basically covers the gold and silver. To me, it still has a downward bias. I don't see anything to change the name or change the scenario there or not. If we start talking here about the Treasury bonds and Treasury notes, just give you, again, the longer-term view here, you'll see that yeah, it was a white, well, we don't have wild horses anymore in Arizona. There's just been too much. They still have, that's not true. They have them over by Yuma, There's still cowboy stuff over there. If you ever get to Yuma, which is basically the armpit of Arizona, I hate to say that, but it is. That's where the Yuma Territorial Prison is, folks. That's a state. It's a national monument now. But boy, they talk about a bad prison. Woo! That was. I went to a gun show there once about 45 years ago and toured that prison, and boy, oh boy, 70% of the people that went in there never came out. They died there. That's how bad it was. And believe me, no air conditioning in Arizona when it's 110 in Yuma. That would be a death sentence. You know, that would certainly be tough. But the way they were treated was certainly inhumane, to say the least. That's neither here nor there. You've asked me to bring this chart up of Microsoft again. Let's just take a quick look at it here to show you what I'm talking about. Folks, this is a very, very quiet stock. Since July the 23rd, we've been in a $5 range, folks. That's a 6% swing in a month. That's nothing, you know, up and down. And we basically went from 75 down to 71.5 and 71.5 back to 75.5. And, you know, the numbers are there, but, you know, there's basically no volatility, and that's why we're seeing the same thing in the VIX. No one is paying attention to what's happening in the world. That's the bottom line. Now, history says there's going to be something that's going to make it happen, but if missiles and nuclear weapons don't make it move, or terrorist attacks in London don't make it move, you know, this market is strong. You know, that's basically, you know, what you're looking at. If you take a look at the New York Stock Exchange Index as of yesterday, and let's get this up here so you can take a look at it, we do have a very small, you know, but well, it's not a small one because it took a month to form. We have a nice butterfly pattern up here at the 12,070 level, but that's pretty much what you're watching here. It's not, you know, it's not a market that is turned down. It had a chance. My work said that it had to start going down this week, and it really didn't. So we'll have to wait and see, you know, what the next step is. But believe me, you look at all the things technically, there's no reason the market to be here, but it's still here, just like it was in the March of 2000, folks, when we had the dot-com bubble. You know, that's the same type of scenario. But, you know, it's not over till it's over, as Yogi Berra said, so pay attention. That's why trading the foreign exchange markets and gold and crude oil and some of the other things are a lot of fun, because they're moving around all the time, irregardless of what the market is. The stock market is such a small part of investing. It's just really amazing. It's a very, very small fraction of what happens in foreign exchange, and it's a fraction of what happens in the bond markets. So, you know, everybody's infatuated with the S&P and the Dow E-mini and the NASDAQ and stuff, but there are other markets that are much easier to trade. Spoken by someone who has been wrong about this turn that I thought was coming in on Monday, but we'll see what how the market ends up today. Probably a new high ground because it's a Friday in an up week. The problem we have here is triple witching hour, which is always, you know, a big thing to look at. We had another question about the copper. I'll bring this up and we'll take a quick look at it. Wow, it's coming to the end of the day. Hey, folks, one other thing. I have a request. You know, I do this every day, and it takes me about 2 hours to prepare for this. It would really be helpful if you call in on some questions. You know, even if you want to know lottery numbers, I'm really good with that. I got one lottery number about 7 months ago, so I'm really good with lottery numbers. And birthday predictions, oh, yes, that's it. Anyway, let's take a look here at the copper. We've got some support coming in at 292. The last time I saw copper, it was the Christmas copper. It was trading around 294, so it's getting pretty close to that number. So you need to watch that 382 level in copper, because if that doesn't hold, that tells you that the whole Gamilla is really headed for River City. In other words, it's going to be going lower. That's what it looks like. So we'll watch it very, very closely in the copper to keep a very close eye on that. One other stock or one other chart I wanted to mention here, and we'll have to do this before the break, is this stock on the relationship between the commodities and equities. It's at an all-time low, even below the lows of 1974 when we had corn trading at $1.20. So this is a big thing on this chart. But like I said, this is long term, and you don't know when that thing is going to turn. But we've seen some big moves in some of these commodities, like orange juice, which no one that I know trades that. But anyway, 877-927-6648. Oh, shit.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien has just announced that he'll be coming to Boston September 30th for a free workshop, The Art of Timing the Trade. Join Tom O'Brien Saturday morning, September 30th at the Boston Marriott in Burlington, Massachusetts, as he breaks down his trading methodology and provides you with the tools to become a more successful and profitable trader. Everyone that attends in person will receive a free signed copy of Tom's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. Daryl Martin from Apex Investing Institute will also be presenting for 90 minutes at this free event.
Hi, folks. This is Tom O'Brien. Join me in Boston on September 30th as I return to my hometown for a workshop about the art of timing the trade. I look forward to seeing all the tigers and tigresses for this special free event.
All action starts early at 7:30 a.m. with a continental breakfast and wraps up at about 1 p.m. Topics that Tom will be covering during his presentation include quality volume, cause and effect, ABC structures, swing points, and much, much more. For all the information on this free Boston event taking place Saturday, September 30th, visit the front page of TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I posted the chart of Home Depot, and you'll notice that it has the same butterfly pattern that we have in Microsoft. And fortunately, I made a request, and we have our caller today from Princeton, New Jersey. Beverly, are you there?
I certainly am. And you told me you lived on Mount Lucas on the north side.
It was there at the where the Commodity Corporation complex was there, where they had a apartment complex there, and that's where I lived.
Okay, because there is no north side of Mount Lucas.
No, I know that. No, it was on the south side.
The road goes north and south. There is no north side. Anyway,
I know
would you pull up the Bradley model?
Sure, I'll be happy to, and we'll post it in here because the Bradley model is right, Beverly. It's the market that is wrong. I hope you understand that.
Well, I think you're being way too specific.
I could be.
Well, yeah, you had said that. There it is. Okay, so if you look at the other ones, you were calling it to that date of the 11th. Okay,
yes.
And today's the 15th. But if you look at the other rollovers, they don't happen on exactly the same date. I think this thing could this thing could still head south. It probably's got another week, and it could still head south, and it would still be following the model.
It certainly could be, but what I have to try to do is I match the patterns with the model, and when it breaks above that, it's pretty tough to do. But you make a really good point, the fact that it could be off by, as much as a week or two. So that's a very good point.
You look at the break at June 26th. Okay.
Yes, I see
and the
that.
Bradley model has it still going down, but it broke higher than that, and then it went up according to and it peaked perfectly at the August 7th, and then started heading south. But I still think this has some merit to it.
Well, we're going to know probably in our lifetime, Beverly. That's about as close as I can get. Anyway, I enjoyed my time there, and I want to thank you for calling in. Call in again if you get a chance. We love talking to you.
Okay, really good. Bye-bye, Larry.
You bet. Yeah, live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.